Hi, I'm Rob. In today's video, I'll be covering the best and worst performing S&P 500 stocks in 2022. Firstly, the S&P 500 is a US stock market index. It tracks the performance of 500 US companies. It is up nearly 40% in the past 5 years, which works out at 7.88% a year on average. However, it is down 20% in the past year, along with most other large indexes. Let's quickly take a look at the top holdings for the S&P 500. The holdings are market cap weighted, meaning the bigger companies make up a higher percentage. It is also more diversified index than Dow Jones and the Nasdaq. Here are the top 10 holdings, with Apple and Microsoft making up over 10% of the entire holdings. The top 10 holdings make up a massive 25.8% of the index, meaning that the remaining 490 companies share 75% remaining. The smallest companies have a weighting of around 0.01%, meaning the share price movement in the top holdings, like Apple, would have 600 times more of an impact on the overall value of the index when compared with the smallest of holdings. Before we get into the worst performing stocks, it's good to take a look at the S&P's historical returns. The past 10 years has seen an average return of 15%, with 2018 and 2022 pulling this average down. The past 10 years has been above its long-term average. Since its inception, it's averaged an annualized return of around 11%. So what were the worst performing stocks? Number 5 might surprise quite a few people, as the stock had over a 1000% gain from 2020 to the start of 2022, and was only added to the index in December of 2020. It is of course Tesla. Its share price has dropped 65% in 2022, and its decline has continued into the first week of 2023. One large cause of this decline was the CEO Elon Musk selling over $40 billion worth of shares to fund his personal purchase of Twitter. Tesla has also had to reduce prices for some of their models in China due to lower demand. Number 4 is SVB Financials, also known as Silicon Valley Bank. It has dropped 66% in 2022. This is much higher than its peers in the Vanguard Financials ETF, which is only down 17.5%. The large decrease compared to other banks is mostly due to the management's poor financial guidance. They have revised its forecast every quarter in 2022, and if there's something that investors hate is uncertainty. They have also been struggling to increase their margins in the current interest rate environment. At number 3, we have Align Technology, the manufacturer of 3D digital scanners and the orthodontic device Invisalign. The stock has dropped 68% in 2022, with a slight recovery coming into the first week of 2023. In 2020 and 2021, the company benefited from the US stimulus, but are now struggling due to some of their core patents expiring, opening the company up to more competition from generic sources. This has caused a decline in sales of 12% year over year during the third quarter. Second is Match Group. The company dropped 69% in 2022. They're the company behind major dating apps like Tinder, Match.com, and Hinge. One large reason for the decline was due to a $441 million settlement with Tinder's founders, which occurred in December of 2021. The company also only managed a 1% revenue growth, but it does still have high levels of free cash flow, with the stock trading at just 15 times the free cash flow. The worst performing stock of 2022, losing nearly 3/4 of its value, was Generac Holdings. They manufacture power generators. The company's share price massively increased over the previous 2 years, like most others on this list. The company's enterprise value to EBITDA rose to 40 times, massively above its long-term average of 12 to 15 times. This was due to a large spike in revenue in 2021. Although all financial figures in 2020 and 21 rose by a large amount, I think a nearly 400% share price increase from early 2020 to its peak in November 2021 was a bit too much. The company also has a high level of debt, which means the increasing interest rate environment will harm them more than others. Simply Wall Street has a fair value of Generac at $148, so it's currently undervalued, but also shows that the peak share price of just under $500 will remain a distant memory. Now let's look at the best performing stocks in the index. Now unfortunately this list is pretty boring compared with the worst performers. All of the top 5 are oil, gas and energy companies. Number 5 is ExxonMobil with an 80% increase. Number 4 is Marathon Petroleum with an 82% increase. At 3 is Hess with a 92% increase. The second best was Constellation Energy, doubling their share price with a 105% gain. And the top performing stock with a massive 117% share price increase, while the index was down 20% overall, is Occidental Petroleum. There isn't a big secret behind these gains. Higher oil and gas prices have allowed these companies to increase their profits massively. Occidental Petroleum has been given an additional boost as Warren Buffett added it to its Berkshire Hathaway's holdings, buying 195 million shares, valued at nearly $12 billion, making it worth 4% of his portfolio. Quickly looking at the 9th best performing stock in 2022, the only company in the top 10 not oil and gas is First Solar. They manufacture solar panels. They have also benefited from high oil and gas prices. However, not directly. This has increased demands for other energy types. The Inflation Reduction Act was designed to accelerate the transition into solar energy, providing numerous subsidies and tax credits for companies like First Solar to take advantage of. This has helped boost the stock price. Now, as mentioned earlier, the index is market cap weighted. So let's look at the performance of some of the other major stocks. The biggest being Apple. They fell from a $3 trillion market cap at the start of 2022 to below $2 trillion when they saw their share price decline 27%. Apple has not been immune to the falls in the general market caused by a looming recession paired with high inflation and rising interest rates. The additional fall was caused by fears over disruptions to its China-based factories, with China's strict zero-COVID policy. However, it's still performing better than other tech peers such as Nvidia and AMD, both down 50% in 2022. The tech-heavy Nasdaq index is down 33% as well. Next, we have Microsoft. Shares fell 29% in 2022. UBS investment bank analysts downgraded the company from buy to neutral and cut its price target 17% to $250. This was due to the company's posting weaker than expected results for its Azure cloud services, which is the company's most profitable division. Microsoft is also in the process of acquiring the gaming studio Activision. This is currently being challenged by multiple regulators across the world as anti-competition. I made a video back in February regarding this deal, so be sure to check that out for more info. Google, which makes up 3% of the index, has fallen 39% in 2022. Having experienced sustained high growth of revenue over the past 2 decades, signs of slowing growth has spooked investors. With single-digit growth for Google search and even having a revenue decline for YouTube, the company's spending is outpacing the rate of expected revenue growth, has caused the stock to fall greater than the index average. The last stock I'll be covering today is Amazon. They benefited during the COVID lockdowns but are now struggling, with their share price cutting in half. They posted unexpected negative earnings per share in Q1 and Q2, with free cash flow have been negative for the trailing 12 months. Inflation has raised the company's costs on everything from transporting goods to running its warehouses. Second, it's starting to weigh on customers' wallets, meaning that people have less money to spend on Amazon. Amazon has also recorded a huge loss in the electric car company Rivian. Its stake was once worth $27 billion, but as the share price of Rivian has fallen over 80%, taking Amazon's loss on paper into the tens of billions. The company has also just announced its plan to cut 18,000 jobs, as it hopes to reduce expenses after overhiring during the pandemic. Thanks for watching. Please like and subscribe if you enjoyed, and why not check out one of my other videos below.